This is the last theory session I am going to discuss with you all, which is theory session 9, contemporary issues in taxation. This is very small topic, but currently the many papers this has tested, including the last time paper March 2021. Then I thought it's good to discuss these areas. Then under this session, I am mostly focused on the taxation and the ethics part. And the penal provisions applicable to tax professionals. Okay. Then in the contemporary issues in taxation, which is your 10% area, you need to know what are the new legislations. In the new legislations, it is given, explain the significant changes to tax legislation enacted not later than the immediate 6th preceding month and the impact on the corporate and individual taxation. But lamai, when it comes to your examination, June 2021 examination, here with reference to new legislations, you all only having the changes of the VAT. You all know these things. Then the amended, it's earlier it was proposed changes. Now from in 13th May, it has the amended acts was released. Then it's the now law has amended, but for your examination these are not tested. Therefore, no much worries about this new legislation. Only the changes of VAT rate 15% to 8%, which is with effective from, if not mistaken, it's from the 1st December 2019. Yeah, it's from the 1st December 2019. Then that part you should have to know. All of you all know that thing. Then financial reporting and taxation. When it comes to financial reporting and taxation, lamai, as per the provisions of the Inland Revenue Act, which is in the section 21, in the method of accounting, it's very, even when doing even the business income I have discussed when doing the pilot paper. In the financial reporting and taxation, it has given under section 21, in the method of accounting, it very clearly given the provisions of the Inland Revenue Act, and if the very specifically if it has not given, we should apply what? Generally accepted accounting principles. That means SLFRSs, LKSs and the SMEs for the SLFRSs for the SMEs. Therefore, there is no gap. Then not much to discuss on these areas, since you are expert on your accounting knowledge, which is as the upper in the last level of the chartered examination, you are expert on your financial reporting part. Okay, therefore, actually for the taxation and the financial accounting, in terms of that, you don't have much worry. Okay, in earlier we had the for gazette notification for SLFRSs and the taxation, there was a gazette notification, but now such gazette notification is not applicable. Then I am highly concerned on this part, taxation and ethics, because this has tested for 5 marks, 3 marks. Then this you should know. And the professional risk. If a the practitioner who is in the practice of the tax field, what are the penal provisions applicable to that person, or due to his profession he has to act as the tax consultant. Therefore, under that situation, what are the applicable penal provision if the misconduct, evasion, for these things. Okay, these are the 4 areas going to be discussed. In that, the discussion content is for the new tax legislations. It's only for the VAT. Financial reporting and taxation, it is no difference under section 21, which is method of accounting, I have explained. Taxation and ethics and the professional risk. We will look at one by one. New tax legislations. Now, for your examination, lamai, new tax legislations are these. There are a couple of amendments made by VAT Act by the Gazette Notification number 215152, dated 29 November 2019, which is in a main thing is the rate change of the VAT. The value added tax shall be charged with effect from 1st December 2019. Then here how on what it should be charged? On the supply of services by hotel, guest house, restaurant or other similar business providing similar services regarded with the Sri Lankan Tourist Development Authority if 60% of the total value of the inputs are sourced from local sources, local supplies at the rate of 0%. If there are hotel, in that hotel the 60% of the total value of inputs are sourced from the local supplies or local sources, then the rate should be 0%. Okay. Then that's mean for the hotel, for inputs, that's mean for the expenses side of it, if it is totally 60% or more taken from the Sri Lanka, then it is can be applied the 0%. Then on the supply of financial services at the rate of 15%. It is, you all know, even the VAT normal standard rate 8%, standard rate 15 to 8 has changed, but in the VAT on FS, the rate on the value addition, the rate is the 15%. Then on import of goods set out in the HS codes described in the 2095/20 dated on 1st November 2018 at the rates specified in the particular columns. It has under the HS codes a lot of items given. It at the point of import, whether it's 0, whether it's liable, it has mentioned, and all other cases the rate is 8% other than 1, 2, 3. Then all other cases rate is the standard rate of the 8%. It is on new legislation. Now I need to come to here, taxation and ethics. How here we need to look at due to acquiring a tax assignment. Due to acquiring a tax assignment, there is a risk of the breaching of the ethical principle. This is what you need to look at. Then if there are any breaching of the ethical principles, you cannot accept this appointment. If there is breaching of this ethical principle, therefore you cannot accept this assignment, cannot accept. But if there are safeguards, for this, then apply these safeguards and accept this professional assignment or a professional acceptance, accept that professional assignment. Okay. Then here you need to look at ethical principle. What is the principle going to breach and how? Now you know there are objectivity, confidentiality, there are many principles. In that lamai you need to look at what is the position it's going to breach. Is it a self-review threat? Is it a self-interest threat? Then it's a issue to my professional judgment. Now you need to look at for that threat. There are threats for the professional principles. For that threats, if you have the safeguards, then apply that safeguards and they accept the assignment. That's all you should know. Okay, come to this taxation and ethics. This all I have extracted from your study text. Confidentiality, section 141 of the Code of Ethics of CA Institute of Chartered Accountants of Sri Lanka. The principle of confidentiality imposes an obligation on all professional accounts on refrain from, we are talking about the confidentiality, it imposes an obligation on all professional accounts to refrain from A. disclosing outside the firm or employing organization confidential information acquires as a result of professional and business relationship without proper and specific authority, or unless there is a legal or professional right or duty to disclose. What's the confidentiality? We should have a confidentiality if we have accept the professional assignment or the employing organization. What we should do, what are the information due to my employment, due to my professional engagement. If I have any information, I should not leak that information to the outside parties. Using confidential information acquires as a result of professional and business relationships to their personal advantage or the advantage of the third party. That may be in a client information. Using that client information, I should not take personal advantage. That means particular maybe the chartered accountant, maybe the person who handling that assignment should not take the personal advantage, and by giving that information to third party should not take the advantage with that third party. Okay. Then next one, the one of the threat, which is the conflict of interest. A professional, this is section 220 of Code of Ethics of Institute of Chartered Accountants of Sri Lanka. A professional accountant in public practice may be faced with conflict of interest. What is the situation? The professional accountant can face the conflict of interest when performing a professional service. How? A conflict of interest creates threats to objectivity. One of the ethical principle is the objectivity. Then it's a conflict of interest to objectivity. The confidentiality, objectivity, the professional due care, these are the fundamental principles. Then integrity, then you need to look at any threats to these principles. Threat to objectivity and may create threats to the other fundamental principles. Such threats may be created when the objectivity is you should not be biasness. You in the professional judgment you should provide it as the independent party. Then such threats may be created when 1. A professional accountant provides a professional services relating to a particular matter for 2 or more clients whose interests with respect to that matter are in conflict. Can you remember in March 2021 question paper, it has tested this in the question 1 by giving a particular partner of the audit firm is doing consultation to the bank as well as the 2 directors of the bank. Under that situation, the conflict of interest happening, and in that it's threat to the objectivity. It's given the professional accountant provides a professional service relating to a particular matter for 2 or more clients whose 2 or more clients whose interests with respect to that matter are in conflict. That means if I have given one opinion to the directors, it's disadvantage to the bank. If I have given a good opinion to bank, maybe there is a bank need to reduce the cost. Then I am telling reduce the salaries of the top management. Then it's directly impact to the board of directors. Then likewise, due to my professional advice, the two parties, that interest, there is a conflict of interest. Then it tends to objectivity. Then the interest of the professional accountant with respect to a particular matter and the interest of the client for whom the professional accountant provides a professional service relate to that matter are in conflict. What is that? Interest of the professional accountant with respect to a particular matter and the interest of the client. Now, I have an interest and client has the interest. Now, I am giving a one opinion, client is telling a one opinion, one thing client needs, then there is when I am giving my judgment, there is a conflict of interest. A professional accountant shall now allow a conflict of interest, compromise professional or business judgment. Then due to this conflict of interest, if there is a issue to my professional judgment, if I am biasness on my professional judgment to my favoration or the party favoration, then it is an issue. Therefore, now section 147 of the Code of Ethics of Institute of Chartered Accountants of Sri Lanka as a fundamental principle, confidentiality serve the public interest because it facilitates the free flow of information from the professional accountants, clients or employing organization to the professional accountant. Nevertheless, the following are the circumstances where professional accountant are or may be required to disclose confidential information or when such disclosure may be appropriate. Now, Lamai, under the confidential under the confidential code of ethics, in the principle of that code of ethics, here it's telling don't disclose the information of my clients, don't disclose the information of my employer, but it's given don't disclose the information of that particular party for the benefit of the me or other parties. But in the law itself, there are situations you can disclose you have to breach the confidential that principle due to the law is telling you to do so. There are some unethical things happening, then you have to disclose. Come to that. The disclosure is permitted by law and is authorized by the client or the employer. There is a legal provision to disclose that, you know, there are the NOCLA provisions are there and the central bank regulations are there and the fraud investigation regulations are there, then anti-terrorism things are there, laws are there, then there are many. Disclosure is permitted by law and is authorized by the client or employer. Second, disclosure is required by law. For example, the produce of documents or other provision of evidence in the course of legal proceedings or disclosure to the appropriate public authorities of the infringement of the law that come into light. And the third one, there is a professional duty or right to disclose when not prohibited by law, to comply with the quality review of the member body or professional body, to respond to an inquiry or investigation by a member body or regulatory body, to protect the professional interest of a professional accountant in legal proceedings, or to comply with technical and professional standards including ethical requirements. Then section 123, which is notice to obtain information of the Inland Revenue Act, empower Commissioner to request information from other person other than taxpayer by providing reasonable notice. The Commissioner General can collect the information of the taxpayer by sending a notice under section 123, notice to obtain information. Please, if you have time, please go through section 123 and before the exam please look at that provision also. It's a very small provision. You can check the provision and mark it in the Inland Revenue Act. Okay. Then I need to hear the professional risk. And this also many times in the paper this has tested. Section 126 where it's telling the taxpayer or his authorized agent, authorized representative shall sign the return by confirming the accuracy and the correctness of the return. Then we will look at from this what is a threat to us, the professional risk. According to section 126 tax return, an approved accountant involved to preparation of tax return in the capacity of an auditor or tax consultant, that person is required to sign the return. The section 126 provision. When a return or part of a return has prepared for reward by some other person, including by an approved accountant, the approved accountant has defined in the Inland Revenue Act under section 195, other than a full-time employee of the taxpayer, that other person shall also sign the return. Here there is exclusion. Exclusion for whom, Lamai? For full-time employee of the taxpayer. Exclusion for the full-time employer of the taxpayer. Now, therefore, even there is a approved accountant, and if he prepared the tax return of the taxpayer, then he has to sign, but other than a full-time employer. But there is an issue, even the full-time employee who is the authorized representative of the taxpayer, then that person has to sign the return. Further, approved accountant has been defined under section 195 as follows. Approved accountant means an accountant who is a member of the Institute of Chartered Accountants of Sri Lanka, or an accountant who is a fellow member of Association of Accounting Technicians of Sri Lanka in relation to any person or any partnership other than company where the turnover of the business of the person or partnership for the year does not exceed 100 million rupees. Then for in here the companies they cannot sign, but other than the company, any person or partnership, the return they can sign. Then what are if there are any the mistakes, any negligence, willful negligence, evasions, what are the penal provisions? The following penal provisions are available in the Inland Revenue Act for fraud and incorrect tax return. In section 180, negligence or fraudulent underpayment is stated as follows. Where tax is underpaid as a result of an incorrect statement or a material omission in the taxpayer's return, and the statement or omission is a result of, see the word, intentional conduct or negligence on the part of the taxpayer, the taxpayer shall liable to a penalty in the amount of 25% of the underpayment if paragraph B does not apply. What is the paragraph B? 75% of the underpayment if the amount of the underpayment is higher than 10 million rupees or higher than 25% of the person's tax liability. If it is so, 75% of the underpayment, if the amount of the underpayment is this requirement satisfied, then that taxpayer shall liable under the part B. If not, the 25% of the underpayment if paragraph B does not apply. Then there is a one penal provision for the taxpayer. Secondly, in addition to section in addition to above, the section 189 tax evasion is stated as follows. A person who willfully evades, හිතාමතාම tax ගෙවලා නැත්තම්. A person who willfully evades or attempts to evade the assessment, payment or collection of tax, or who willfully and fraudulently claims a refund. It is telling the evades the assessment, payments or collection of tax, or who willfully fraudulently claim a refund of tax to which the person is not entitled. මට අයිති නැති දේවල් refunds claim කළා. Shall be guilty of an offence and shall be liable on a conviction to the fine not exceeding 10 million rupees, or to imprisonment for a term not exceeding 2 years, or to both such fine and imprisonment. In the light of the above section, it is clear there are penal provisions to deal with the intentionally or willful evasion of the tax. Then these are the two penal provisions on the willful evasions and the negligent or fraudulent underpayment. Then please go through these areas before the examination. Very short the discussion on this, please go through, and I think this is helpful for you all. Okay, this is the last discussion of your theory for with reference to up to your June 2021 examination on SL3 corporate taxation. Lamai, please look at, if you are the referring to the webinar series, then in that please look at from the starting part of this webinar series. Even I have started from the revision part of it under the pilot paper, but another lecturer also done the theory part. Please go through that in that time. Then after that, what are the areas which not covered, I have done in here. Then therefore that part, revision and the theory. Then after that, the December 2020 online paper discussion, March 2021 paper discussion, and this theory part I have done the non-resident taxation and international taxation, most of the important areas covered with the questions, and the double taxation treaty. Secondly, statutory provisions, the key areas covered, and transfer pricing and this contemporary issues in taxation, because in that revision session I have done lot of the theory plus calculation part with reference to VAT and the company taxation and some the enhanced capital allowances, exemptions, lot of areas covered. Okay, why I am telling you to refer, if so the most of the areas covered to you under that entire discussion, not only this time discussion, but with the entire discussion, the lot of areas covered, because up to now all the examination is tested without the amendments. Therefore, all of these things are applicable, but only the VAT rate is the 8%, not the 15%, as I am repeating it. Then it is, all of you all know that. Okay. Then with Lamai, I am winding up the theory session for corporate taxation under the tax and law pillar. Then I will meet you again with the revision session discussion under SL3 corporate taxation paper. Thank you.